Hey traders, welcome back to the weekly preview video for a shortened trading week this week, starting today, Tuesday, May the 31st, 2022. Okay, folks, let's get into our weekly trading preview. It is a shortened week this week with the Memorial Day holiday, and I want to talk about that a little bit here today as well. Give my gratitude for all of those of you that were in the service. Today is obviously Tuesday, May the 31st, 2022, so we're starting an abbreviated schedule this week. But we always start by looking at our weekly bullish and bearish trading signals. This is where we use basically the dual overlay with multiple moving averages, both simple and exponential, all the way from 5 days to 200 days. We use about 12 different oscillators or technical indicators to give us an overview of where the market is. We are still in a sell mode here in the stock market, but we've moved from strong sell to sell, and our moving averages are moving back now to neutral. A couple big substantive things that happened this past week. We were able to, again, sustain above the 100 and 200-day moving averages. Again, this is on a weekly period. And the big thing, of course, was that we did break above the 5-week period moving average, which, again, puts us out of the bearish channel. Doesn't mean we're necessarily out of a bear market trend, but it does mean that we're out of the bear market channel that we have been in for quite a while. So we'll talk about that a little bit more in depth here. But I think that we've had some pretty big demarcations take place over these last few days. We'll talk about some of the numbers that I'm looking at here on the S&P futures contract and sort of where I see the market going, some key resistance areas, some key support areas. So we had a 6% return in the marketplace this last week. That is incredibly rare. It doesn't happen very often. The last time that it did happen was November of 2020. And incidentally, when that did happen in November of 2020, for that week as time frame, it did mark the bottom of a bear market trend at that point. Will this 6-week rise that we had this last week mark the bear market bottom of this trading range that we have been in really since the start of the year, this bearish trend? Well, we don't know yet, but it is interesting to make note of that it is a pretty rare occurrence. But we have broken out of the downtrend. That's really the key component here that I want to illustrate, is that we have broken out of the downtrend. I'm still putting now my resistance levels on top would be 41.65. As we speak right now, it's about 4:50 a.m. on a Tuesday here, Mountain Time for me. And futures are down about 17 points. We're sitting on the E-minis at about 41.38. 41.38 right now as of this filming. So 41.65, that's a huge pivot point for me in the marketplace right here. We've been above it for the last couple of days in some of these truncated or shorted futures sessions that we've had, but we're just down below it right now. So it'd be a big deal right now, number one, for the market to get back up above 41.65 here this morning. Above that is 41.95, 4,200. That's the level that we have been playing with for quite a bit. Above 4,200 is 42.50, and then come 42.65, and then that 42.95, 4,300 levels. So those would be the resistance levels that I would be keeping on my watch list for today for bullish price action. For bearish price action, I'm looking at support down. Obviously, the 41.65 level is a huge level, really big demarcation point. If we can't hold 41.65, 41.30, just below that would be my next target. Below that is 40.95, then 40.35. Now, below 40.35 starts to get really ugly again. It would probably and I would anticipate a big slide there from 40.35 to somewhere around 39.80, which has become in the past a pretty strong support level. So we've got this 39.80, really strong support level down below where we're at right now. 41.65, just above where we're at right now. Big demarcation point as well. So those are some of the things that I'm looking at in the marketplace. Our sector rotation hasn't really changed. Obviously, we look at this month to month, but it will be interesting here as we finish out this month in the next little bit to take a look at how the monthly sector rotation has altered and maybe where some opportunities lie if in fact we do get back to more of a bullish stance. Where's the most undervalued sector in the marketplace? Pretty huge difference for, again, the first time in a very long time. If we look at the weekly heat maps here in the marketplace, this red, this sea of red, has become sort of commonplace. And last week, of course, it was just, again, an absolutely banner week for the marketplace. So we'll see if it holds. There was pretty much, as you can see, strength across the board in all of the all of the sectors in the marketplace last week. We had 2 weeks ago, obviously, just an absolute bloodbath in the marketplace. We reversed that and then some this past week with just strong results all the way across all of the major indices that we track. Again, that 6+% return in the SPY, the SPX. Big week, big number. It doesn't happen very often that you see those kinds of results. And again, I think it is interesting to note that November 2020, the last time that did happen, it did actually coincide and mark the bottom of a downtrend. So we'll see if that continues here going forward. We do look at the put call ratio. It's a gauge to track market sentiment. And again, when the put call ratio is above 1, when put volume exceeds call volume, and it's below 1 when call volume exceeds put volume. So again, it just talks about really where is the market focused. Is it on the put side or the call side? You can see week to week. This is 2 weeks ago up here. We were really above 1.17, and that was pretty high. It was pretty negative and bearish. Total put to call ratio now is 0.9, a little bit more neutral in nature, starting to actually see a little bit more activity on the call side of this. However, one of the things that we do need to talk about a little bit here as we get into our strategies is the volume. Overall volume is dropping in terms of what we're seeing. Open interest is dropping. Volume's kind of dried up the last couple of days. And again, we'll get into that here in just a second. You can see as of the writing of putting this together here on Friday's close, the S&P current level is about 41.58. Looks like it's going to sell off just a tad below that here as we open up today, Tuesday morning. Puts still outnumbering the calls in terms of activity, but you're starting to see that equilibrate. You're starting to see that really balance out here. And you're seeing, again, it's hard to see these green bars because they're the put number is superimposed on top of them. But you're starting to see the call volume come back into play here. We haven't seen that for quite a while. Still a pretty big demarcation point here around this 39.95 level, this 4,000 level. That's been a big put and call wall for quite a while. And again, I think that that's going to probably come into play here in terms of the trades that we initiate this week in our trading room. This is where I wanted to talk about. So last week, the expected move was about 126 points. This week, it's down to 100 points. Now, I have been shouting from the rooftops for several months now that if you have thought about trading 0DTE strategies but haven't, now is the time. If you were playing around with a 0DTE strategy where you were either maybe using a butterfly, where you had to simply guess where the market was going, and even if you were right, you never really made any substantive money, or you were using some other approach that just wasn't giving you the ability to really have a true potential to make at least $1,000 a day. that you needed to get going. You needed to get moving, get off the couch, make hay while the sun shines, because the sun doesn't always shine in the marketplace, and it certainly doesn't always shine on specific strategies. And I don't know if this is going to be a sea change here, and we're going to go back to sort of the scenario that we had in 2021. But the last 3 trading days of last week, it was almost like a light switch was flipped. Volume dried up, IV, implied volatility, dried up, premiums dried up, and we almost, not quite, but almost were back to the challenges that we faced in 2021. We've been very blessed. We've been very, very lucky and fortunate this year that we've been able to do single-sided trades and bring in 10% returns on a daily basis. Last year, 2021, we were lucky to get 7% returns if we had both legs in simultaneously right up front on the day and needed no adjustments. Many days were 2-3% return days. So I don't know if we're going back to those days or not, but nothing lasts forever in the marketplace. And it'll be interesting to see what kind of premiums we can get and what we have to work with this week, because I think a change might be coming upon us here. And just the gravy days of 0 DTE this year that we have had maybe drying up. We'll see. I hope not, but we'll see how that progresses. If you look at a heat volume map chart, you can see that breakout that I was talking about there, where we broke out of this down channel. Now we are right back up again here to that very, I think, important 4165 level in the overall marketplace. And you can see that that's acted as huge support levels prior. We'll see if it continues to work in that area right now. Again, pretty much across the board here with our technical indicators, we're seeing buy signals starting to form and come in. Question will be, can we break above that 4165 level, get to that 4195, 4200 level, and push back up above it? That's going to be, I think, the real key for the bulls in today's market price action. We do look at the fear and greed sentiment index. I won't go through once again all of the things that the fear and greed sentiment reading takes into account and looks at, but it's basically a contrarian indicator. When there's, blood running in the streets, as Baron von Rothschild says, that's the time when you want to start buying things. And when everybody is euphoric and everybody that you know is talking about NFTs and crypto and the next hot this stock and the next hot this stock, and you have extreme greed, that's probably the time to be heading for the exits. It is interesting as you look at the fear greed sentiment that a week ago we were way down here at 13, one of the lowest readings that we've had in quite a while. Again, remember, this is a contrarian indicator. So when you are way down in here, you can see that November 2020 date. That would have been a really good time to have jumped into the marketplace. Well, that's where we were last week before we got that 6% rally in the week. And now that extreme fear factor still up there in the extreme fear area, but it has lessened quite a bit. So did that mark the bottom of this downturn? We'll have to see. The VIX never really ever gave us any capitulation here in the marketplace. You usually will see just some kind of a massive spike in the VIX. We haven't seen that, and so that's the one question that I think a lot of traders still have in their minds is, did we ever really get any capitulation here, or is this just a pause in the storm before we continue our journey downward? We'll have to obviously take a look at that. As we do move more to a bullish stance, though, on my watch list, some of the things that I'm looking at for this week are underlyings that have triggered a bullish MACD confirmation. So stochastics and MACDs, I use those in conjunction with each other. Stochastics are a little bit of a leading indicator. They do usually kick in and give us a buy or a sell signal 1 to 3 days prior to a MACD does, and MACD is a little bit of a lagging indicator, more of a confirmation bias than anything else. And so these are all indicators that have had a stochastic kick in and give me a buy signal. We're now getting confirmation from the MACD. If you're looking for bullish opportunities this week, this might be a list right here to take a look at and start with. In addition to what I'm watching this week, a couple other things to think about. Obviously, we didn't have trading on Tuesday. So today is, on Monday, and so we do start the week trading on Tuesday today. No major pre-planned news items for today on the agenda. We will basically just roll all of the normal strategies that we initiate on a Monday to today. So we'll have a 0 DTE today. I don't know if we're going to start off with our normal strategy today, or we're going to start off with sort of our usual Tuesday, Thursday strategy, which is starting with a very low risk, low capital trade like a butterfly or a broken wing butterfly, and then doing an overlay on top of that if it doesn't work. We'll just have to see how the price action works as we start to open up the market here. I'm watching again right now here about 5 a.m. in the morning, Mountain Time, my time, about 2.5 hours before the market opens. And the NASDAQ is now back to flirting with a positive open, and the E-minis are trying to work their way back up. So we'll just see what we get with the price action here this morning as we start. But obviously we have a 0 DTE on tap for today. We will be reinitiating our IWM credit strangle and our S&P and our Q. What is normally a 4-day to expiration trade, it'll be 3-day, obviously, this week. We are looking at doing a 1 DTE, a 1-day overnight index trade today as well, putting something on here right around the close, right around the end of the day, that we would hopefully be able to take off tomorrow morning at somewhere between a 35 to 55% capture rate. Get a little bit of theta on that. So those are the trades that we're looking at for here today on Tuesday. Wednesday, we do have Fed speak going on pretty much all morning long. Quite a few Fed members speaking. We do have beige book numbers out 2 hours prior to the close as well. Sometimes that moves the market, sometimes it doesn't. But not a lot of news other than that. Obviously, our core trade for Wednesday will be another 0 DTE index trade. That will be the focus on the day. And then once again, right around the close, with somewhere around a half hour to go in the trading day, we'll look to initiate a 1 DTE overnight index trade once again, with the goal of taking it off Thursday morning at a 35 to 55% capture rate. That'd be the idea there. On Thursday, we do have initial jobless claims coming out. That could be the number that moves the market this week. We'll have to see. We've got U.S. factory orders coming out. We've got crude oil inventory numbers. Now, we do have an oil trade going on right now, and usually our goal is to take that off prior to the close. Usually oil inventory numbers come out about an hour after the open on Wednesdays. We got an extra day this week, which is actually good because I think our oil trade is very close to the profit zone. It's not quite where we want it to be, so another day of trading with that would be nice. And then some more Fed speak taking place on Thursday as well. So on Thursday, a couple of trades that we're going to be focusing on. We will be focusing again back on a 0 DTE, and we will using our separate strategy. I keep track of these in a separate category from a results standpoint. Our normal Tuesday, Thursday 0 DTEs versus our normal Monday, Wednesday, Friday ones, because we do approach them in a different manner. We're also looking at getting a dragonfly trade put on. Now I've got about 3 different underlines that I'm looking at, and I'll obviously narrow that down by Thursday, but it's been a while since we've done a dragonfly, and we're going to look to put one on here on Thursday. And then also on Thursday, obviously, we'll be in the scalping room all day long with a live Zoom feed. I'm going to take a look at maybe a couple of different approaches in our scalping room on Thursday with maybe some potential swing trades, getting in a position and covering it maybe with a covered call or a covered put if it's a short position, but doing a little bit more elongated, longer trades, fewer trades. I think it'll cut down on the commissions. It is a higher probability trade, and it has the potential to generate some income. And it's, I think, going to be maybe a little easier to follow in the scalping room. We did a little poll in the scalping room last weekend, and it's pretty much split 50-50. Some people wanted the easier approach. Some people still wanted to stick with our normal scalping approach. So we'll play around with that a little bit on Thursday and see what everybody's feelings are on that. We do have, again, on the agenda for Thursday, a 1 DTE overnight index trade. So we'll be, again, working at about half hour before the market close, looking to take that off hopefully in the morning on Friday, 35 to 55% capture rate, somewhere in there. Friday, we do have unemployment numbers. We got the non-farm payroll numbers coming out an hour prior to the cash open. And we've got PMI numbers coming out as well. So those could both be market moving numbers. Non-farm payrolls usually can move the market if the numbers are a little off of what was expected. So we'll have to keep an eye out for that here in the morning on Friday. Friday, again, is obviously another 0 DTE day. And I will look for a bonus trade on Friday. Generally don't like to because we're usually pretty worn out by that point in the week. And we're ready for a weekend. But anyway, that's the agenda for our trading this week. Our updated performance results, if you want to kind of keep track of how we're doing and what our numbers look like, are right here. Our 0 DTEs, we've had 64 days of 0 DTE opportunities. We've done 106 total 0 DTE trades. So, we do tend to get the opportunities to get 2 and sometimes 3 of those trades in. If the expected range continues to drop, if volume continues to drop, if IV and premium continues to drop, we're going to lose those opportunities. We're going to lose those opportunities because we are going to need the whole entire day to get the returns that we would want with our initial 0 DTE, and we don't want to load it up with multiple 0 DTEs at the same time. Generally speaking, we don't. So that number might start to equilibrate to where we're only getting 1 a day. But so far, we've had 106 total trades. 103 of those have been winners, only 3 losers. I don't know. It's something like 98.7% win rate or something like that. It's pretty darn good. We'll put it that way. It's been a pretty darn good number for us. Remember, those of you that are in the live trading room, if you go to the trade only chat channel, and you go to the top of our Discord server, there's a pin there that you can hit, and every one of those trading sessions is recorded for you. You can watch it back anytime you want and see how we put those trades together. It's a great teaching tool. It's a great learning tool for you guys. Our 4 DTE trades, we've had 78 winners now, 7 losses. We did have success this past week with both of our 4 DTE trades. Both of those ended up profitable for us. Our IWM weekly credit strangles, we've had 20 total opportunities there, 21 total trades. We were able to double dip on 1 week. I think it was an FOMC week where we took it off on Wednesday. The Fed did their thing, and then we put it back on. 21 total trades. Knock on wood, every one of them's been a winner so far, and they've just been awesome trades. My favorite strategy, really, as you can imagine, with just no losers. Pairs trades, no different this week than last week. We've done 19 total trades. 16 have been winners, 0 losers so far. We do still have the same 3 trades open. These trades usually are 30 to 45 day trades. We ratioed them a couple times now. We're probably going to have to do it a couple times more. The very small capital commitments on this trade. We're talking about adding maybe, $50 to $100 a time to each one of these trades. So they're very, very easy to scale. They're very easy to ratio. We'll keep working those 3 trades. Bear market trades, we do still have the same bear market trade with Merck on. We did a little adjustment to that, and it looks really solid right now. Looks like it should hopefully end up in the winning category. There's still about a month to go with that trade as well. But we have had, of the 68 trades total, 64 winners and 3 losers. We do have the Merck trade still open and working for us. Our Tuesday, Thursday 0 DTE butterflies, again, they're 0 DTE trades, but I do categorize them and break them out from our normal 0 DTEs that we do Monday, Wednesday, and Friday, because we do approach them in a different manner. We start with a butterfly or a broken wing butterfly, very low capital commitment. Sometimes if these trades get absolutely just insane and crazy, it's a $500 commitment capital. Usually it is below $250. And if that trade works out, it's very asymmetric. So, we could make our $1,000 profit goal for the day. And if they don't work out, it's such a small capital amount at risk that we do an overlay trade over that, bring it back into the profit zone. So far, we've done 8 of those. All 8 have been winners. We haven't had any losers yet. Average percentage return this last week was about 22.5%. That's a little misleading because I think it was our Tuesday iteration last week pretty much darn near pegged the top of the tent on the butterfly. And so it was a huge percentage win. It was about a 40-50% percentage win. And then our trade on Thursday, not only did the butterfly not work, but I doubled down on the butterfly, added more capital to it, which really hurt the trade. And so we had to throw a pretty big amount of capital on the overlay part of the trade to get that trade back into the profit zone. So anyway, still a really, really good week for us, and profit is a profit. And then our scalping results for last week. Tuesday, I had pretty much what you would consider a picture perfect day. Try to bring in, we usually trade one ES contract, one E-mini contract. It's about $5,000 of buying power that you put up. Try to bring in about $500 to $1,000 of profit. Brought in $700 on the day. Didn't really have any big drawdowns. Didn't have any really big winners. So it was just a very typical day. Thursday, I could just never get going. Never could get really on the right side of the market. Spent a lot of time, spent about 3 hours of the day just in some chop. And that, of course, eats up your commissions. And it, every $50, $100 loser starts to add up. So about a $900 loss on Thursday. So didn't have too much success overall with scalping this week. Our asymmetric trading system, oh my gosh, I don't know what to say. This thing is it is the most beautiful thing you'll ever see from a portfolio asset allocation model. A lot of our members are reporting on Friday that they're back at all-time highs. You think about what the market has done this year. And these accounts are not just making money. They are at all-time highs. Their account values have never been this high. It's been it was an amazing year in 2021. I think this year, 2022, we're on pace to have an even better year. Not necessarily maybe in terms of return, but in terms of the dual-fold mandate of the program, which is number 1, beat the market returns, which we're just trouncing the market, and number 2, do it at less risk, which we're on pace for over a 77% less risk right now than the overall market. We measure risk through standard deviation and volatility, and it's just been a very stable approach. It's been a wonderful place to have money in this uncertain time that we have had in the marketplace. So that's a little bit of an overview of where our results are at. We again have a new category for the dragonfly and the double diagonals. We haven't done one of those last week, but we will do one of those here starting this week on Thursday. And then we'll get into some double diagonals as well. So we'll start tracking those. A little bit of a bonus trading gift for you guys this week. Try to get something into your hands every week that is something that can help you make money potentially in the stock market. And this week I'm giving you 2 published reports that pull data from the CBOE on the distinction and differences between a put right versus a buy right. So you guys all understand what a covered call is. If you were bullish on a stock, you could buy it, you could go long it, and then you could write a covered call on it. Well, this study, these two studies that I've given you, talk about the power of a bullish strategy where you're not actually buying something and going long, you're selling an at-the-money put and then covering it with a covered call using a 30 delta on about a 30-day expiration. Very interesting studies. The largest drawdown for the short put and covered call is considerably better than being long the market itself. So last week or the week before, we did a zebra trade. Very interesting synthetic way to get long the market with some interesting characteristics. This week, I'm talking about the put right versus the buy right. And I think we're going to look at doing a couple of those opportunity trades as well. If we can continue to hold this bullish stance this week, you can do it obviously to the put side as well. Sell a at the money call and then cover it with a put. So you can do it on the short side as well. But it's an interesting strategy. I do think it is. There's some several more efficient ways to get long or short the market than just going long the market or just going short a stock. So I'll leave that with you guys. That I've already put the link to both of those in the bonus training channel in our Discord. So make sure and check that out, guys, if you haven't seen them already. Always love to communicate with you guys. Make sure every single solitary day in the trading room, we get questions on how does this trade work? What do you do with this? What would this trade look like? And you're talking about training questions, and those are all answered for you on our YouTube channel. So make sure you have subscribed and hit the notification button so that when we put new training out there, you're alerted to that. I love chatting with you guys on Twitter. You can DM me or just post a question to me on Twitter. Usually talking to probably 10 or 15 of you every day on there, and I appreciate your communication there. We have one-on-one Zoom abilities with you guys in the program. If you have not done your one-on-one orientation and strategy session with me, make sure that you schedule that, and you can do it at your convenience. Times are listed in there. My personal email, you can always email me if you have a question. Our private Facebook group. If you want to try the asymmetric trading system, which why wouldn't you? It's amazing. There's a link right there for a 2-week free trial. We've also got a free link right here for 1 week in our live trading room and then our scalping room as well, if you want to come out and try scalping with us. Just a couple things that I'll leave with you guys this week. I do have a lot of gratitude in my heart. Over the last couple of days, yesterday was my dad's 80th birthday. We had a big family get together. Some of my siblings from out of state flew in, and just a big gathering. 80 years old. We watched a little video review of our family life together and everything. And it's, it just got me thinking when I got started training traders to trade back in the day with Robert Kiyosaki. And, I was able to see over 100,000 of you people go through the system over a decade. And I always thought that, one of the questions we always asked was, why do you want to trade? And of course, I thought the answer would immediately be, well, I want to get rich. I want lots of money. And that was partially true. But it was interesting that so many people just said, hey, my most valuable asset is time. And I really want to be able to spend that with the people that are important to me and not be chained to a job. And trading can give us that opportunity. So I am grateful for what trading can provide us. Lifestyle wise, not just financially, but lifestyle wise. And then obviously Memorial Day weekend, I am very grateful for those of you that have served, and I am very aware of the fact that freedom isn't free. So for those of you that have served, I appreciate you guys as well. If you do want to take a peek inside of our live trading room, we've got just an absolutely no risk guarantee for you that you can jump in and check it out. Come in and see how we trade for a week. No cost, no obligation. If you stay after a week and you sign up for the first month and you don't feel like it was absolutely a life-changing opportunity, I will give you a double your money back guarantee on your first month subscription. So it's there's no reason, if you're interested in 0DTs, to not give it a try. I will link a couple of links for you here in the description box. I'll give you a link for signing up for the free one-week trial, and also a link for all of the details on what is required of you for the double your money back guarantee, because yeah, there is some action required on your part. You actually have to do things to make this work. Trading does not put money in your bank account by osmosis. So I'll leave a link for those of you that want to take a look at those. Otherwise, guys, we'll see you in the trading room in 2 hours from now as we get really close to the opening bell here. So take care, and hope you have a great week and had a great weekend.